In Stocking Up today, Tom Burnside joins me now to take a look at a stock that a lot of people own or are interested in owning. It's GE, and good to have you back on the show, John.
Thanks for having me, Ange.
So General Electric, where is this stock going? Because it had a moment where it was a momentum play. People were watching this stock trade above $30, and it was building excitement.
Yeah.
Where are we going from here?
Well, as you remember, they spun off their financial unit, and that was the big issue with that. So I think that was part of the momentum that you're referring to. But now that they've gotten rid of their financial unit, I'm looking for a dividend increase. They haven't increased their dividend in over a year, and therefore at the next board meeting, I'm expecting them to announce a dividend increase, which could be as early as this week or maybe next week. So in that vicinity.
So this could be a nice stock for, say, somebody who's getting close to that retirement age and they just want a long-term hold and they want to bring in some money while they're retiring, or maybe somebody young enough to get in now, because you never know where GE is going to go from here.
Well, it should be, it should be a much more stable company now that they've gotten the financials done, and they like raising that dividend. They want people to know that they're doing well. So
where do you think this stock could go from here? Long term.
It's been a real boring, lazy stock. But in the meantime, if you get a total return of 5 to 10%, it's better than that 2-year yield. I'll tell you that.
Don't you love it? Lazy can work for you in the
Yeah.
stock market. That's awesome.
Exactly.
Let's move on to Cisco Systems. Now, this is another stock that I know a lot of people bought during the dot-com era. Disappointment set in. But now there seems to be a bit of a play here.
Yeah, it came out with earnings the last 2 quarters, and they were both real good. At the first earnings announcement, they actually raised their dividend a significant amount. So again, here we are paying more than the
10-year Treasury.
Exactly. So we like owning that, and I always like having a little downside protection just in case something happens. But that's up to the individual and what their risk tolerance is.
So if somebody buys this stock or purchases some shares, and they are looking at the 10-year Treasury, which is yielding under 2% still here.
Correct.
And then you're getting a 4% yield. It's a win-win on this thing, it looks like.
It kind of looks like it to me. That's why we own it.
What if it goes down?
Well, that's why I always own those puts. You never know. I mean, it's not just about the individual company that can have something. Heck, who knows that could happen. And after being here in the 87 crash, I saw stocks get pummeled for no apparent reason, and I guess I'm still scarred from it. So that's why I always own those downside puts.
Well, time heals all wounds there, I'm told, John.
I don't know. It's
Not
30
that one.
years coming up.
Still upset about the dot-com bomb. Thanks for coming on the show, John.
Thanks for having me.